The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Lobsher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Lobsher. Thank you so much for joining me for another episode and spending your most valuable resource, your time, once again with me. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We have podcasts, we have books, we have reports, webinars, and much, much more. And don't forget to sign up for the #1 newsletter in the alternative wealth strategy and alternative asset investing world, the Wealth Dojo. You can subscribe by going to cashflowninja.com/subscribe. I've got a fantastic show today. I'm joined by my friend Dave Stech. And I've got to say, I met Dave in, I think, 2017. Time flies when you're having fun. Listening to one of his presentations, sharing some incredible research at the time. And I've been following him, and we've become great friends. And I'm also part of Access Insiders, his community. And I've talked about this in the past, where we had such a great event earlier this year at Amelia Island in Florida with fantastic people. And very excited to go to the next one. There's a great group of folks that you'll find in Access Insider. So I'll be there again, and I look forward to every single one of them. So Dave, it's great to see you.
And to you, MC. It's always a pleasure, man.
Yeah, and this is probably a question that people have, because people know the Stech family, Dave Stech, and so forth. And man, you do incredible work, and you keep doing incredible work. And a lot of folks might be thinking, like, man, why is Dave still working? He's independently wealthy. Why he's still so on purpose?
Yeah, well, you're not the first person to have brought this up. And sometimes I ask myself the same question. So I've given it a lot of thought. And I think at the end of the day, it takes me back to, I'm going to say 5 or 6 years ago. My sons and I were talking, and I said, hey, I've got an announcement. I'm going to be retiring. And Josh piped in and he said, Pops, get over that. You suck at retirement. You've tried it 3 times. What makes you think the 4th time is going to be any better? What you ought to do is stop trying to retire and start rewiring. Rewirement is what you ought to be doing. And I thought, holy crap, that dude is smart. Obviously, he must have got his mom's brains. But at the end of the day, that was really the impetus for me focusing on rewirement, not retirement. And my rewirement is just basically taking activities. I mean, you and I are always going to be active, MC. We're never going to stop, watch Oprah, eat bonbons. That's just not in our DNA. But what are you going to do? And the answer is you've got to take activities and rewire them. So for me, I want to help others because I can afford to. I haven't needed money for, well over a decade. And the ability to be able to help others make money because I'm really good at doing it is gratifying. Working with my sons. Think about that. Making money, doing good, having fun every day with your kids. There's just no greater joy on the planet. And the sort of the process that you go through, because you're all doing it together, means that when they inherit my money, it becomes almost second nature. They're just going to continue to do what we've always done instead of someone who's not in the business, in the family, and now they potentially piss the money away. And then I think the third thing is, once you become really good at something, don't you have an obligation to keep doing it? And generally, you become good because you love something. Well, I love what I do. I love who I do it with. And wouldn't it be a disservice if I just stopped and watched Oprah every day? So, anyway, that was a long winded answer to your question, but thanks for asking it. Not the first time I've been asked it, not the first time I've asked myself, but hopefully that's helpful for people. Rewirement. And by the
Absolutely.
way, MC, just to be clear, rewirement, unlike retirement, which is supposed to happen in your 60s, rewirement should happen today for everyone. It doesn't matter where you are in your life, rewire it so that it's better.
And you're certainly the king when it comes to research. That's why definitely should definitely should not be stop doing that. And you just completed a study on how accredited investors can try to add or potentially add a zero to their net worth. I don't think it could have come, by the way, at a better time.
Hmm.
That type of research of everything that's happening, not just in the alternative asset space and world, but all over any investment avenue that anybody is potentially investing in as an accredited investor these days. But let's take a step back quickly on the research side, because that's your unique gift. So, what speak to me about your love for research and what made you absolutely just fall into that and do so much research as you do.
Yeah, it has been our unfair competitive advantage. Think about everybody who gets involved in investing. They try to learn the how, and they don't realize that that's not the critical part. The critical part is timing. If you can get the timing right, you get in at the right time and out of the right time at anything, you're going to make money because you've got a tailwind and you're out of the market when there isn't a tailwind. It's just smart business. And so we spend a fortune every month on research to try to figure out what's coming next. So it informs our businesses, it informs our investments, it informs our life. The bottom line is research is not nice, it's necessary. I mean, it has been our unfair competitive advantage. So why would we research accredited investors? Why wouldn't we research millionaires and multimillionaires and even decamillionaires, 10 million or more, when we're above that? Because success leaves clues. Everyone who's in that sort of category is in the top small percent of the world. So, what is someone doing that we're not doing that we could be doing? And who might we work with to do something together? So, for me, it's all about success leaving clues. It's about our family always being on a quest to grow more personally, professionally, and wealth wise, just like all families should, and using research as the lever to be able to make better informed investment, life, and personal decisions, and our business, of course. So anyway, that's it. I started in a trailer park, as you well know, for the first 20% of my life, and given where I've gotten to, I'm sure not going to screw it up. So if I can place better bets in the future based on what I can figure out is coming next, that's a big deal. So that's why we do it.
So let's jump into some of the findings of this latest research around accredited investors. What surprised you the most? What
Mm.
was very interesting as you're doing this research?
Well, there were really four things that kind of jumped out at me, and hopefully I'll remember them. Remember, I have Sometimer's disease, so sometimes I remember, sometimes I don't. But I've got a pretty good memory when it comes to research. And there were four things that I guess jumped out to me when looking at everyone who has seven, eight, nine, or 10 zeros. I mean, just think about that number of figures. It's a good, it's a good situation to be in. And the four things that jumped out is, first of all, 2022 worldwide wealth actually declined 3%. Think about what was going on in 2022. Interest rates were going up. There was a lot of chaos from a political stability in the world, a lot of things that we could get into now, but aren't necessary. All you need to know is that worldwide wealth dropped 3% in 2022. By contrast, in 2023, it increased 4.2%. So we're almost back, or we're slightly above where we were in 2021. And what adults don't realize, what accredited investors don't realize, is that the longer that it takes you and I to gain wealth, the slower the increase tends to be in future years. Now, that may sound counterintuitive. One would think the more you're able to learn how to make money, the more you can make. Well, that is true, but you've got to be intentional about it. And most people seem to rest on their laurels when they get to seven figures. So, first thing is, worldwide wealth went down, then it went back up, and now we're kind of where we were. Number two, the longer it takes you to gain wealth, the slower the increase is going to be in future years on average. The third thing is, there's this great horizontal wealth transfer that's underway, and there's a lot of reasons behind it. And it's not just baby boomers dying, but there's $83.5 trillion that's actually transferring hands. And it's a zero-sum game. The more MC gets, the less I get. Now, that isn't sort of a scarcity or abundance issue. It's all about, are you prepared to win the game? Are you committed? Remember, commitment's not just saying you're going to do what you're going to do. Commitment is the promise that the conscious mind makes to the soul. So when you commit, you got to go all in. And if you go all in, you're going to win. You just are. Because everyone who's gotten to seven figures or eight figures realizes that they had enough success to get there, unless they inherited it or they won the lottery, but they're going to build on it from that point forward. And the fourth thing that I learned, which is really the big deal, 51.6% of the people in the top quintile, that's the top 20% in anytime you quintile something, 51.6% of the people in the top quintile of wealth will lose some or all of it, which means that just because you joined the 7 or 8 figure club, it doesn't mean someone's going to renew your membership. You have got to be vigilant. You have got to make sure that you're on a pursuit to add a zero. Otherwise, you're likely to lose a zero. And that's pretty sobering when you think about it. So anyway, I'll stop there, except to say that just because you made that 7 or 8 figure club doesn't mean someone's going to renew your membership. And so now's the time to sort of work together to all lift, the boats, as it were. So anyway, I've got more research I could share, but I want to be respectful of the time. So if you want, I'll share more. But if you don't, I don't want to waste anyone's time.
No, this is fascinating because this is the mindset of people. They think that once they hit that 7 or 8 figure net worth, they're set for life, but that's clearly not the case.
Yeah, and in fact, I'll even take it up a notch in terms of, for those of you who are data junkies, you're going to like this. And for those of you who aren't, hang in there, because this is really important. Turns out that 99.9% of the world, let's face it, would kill for our problems, MC. I mean, we are in a great place. And everyone who's accredited that's on this call is in a great place. How many people are there in the world? About 8.2 billion, based on the last worldometer that I looked at. And how many people are in the US? There's about 345 million. Well, the US is about 4% of the world's population. So how many millionaires are there in the world? Well, for those of you listening, you're going to be shocked to hear how many there are. There's 58 million millionaires in the world. 58 million. Now, take 58 million and divide it by 8.2 billion, and what do you get? Less than 1%. In fact, 0.7% of all the people in the world are millionaires. 0.7%. That's 7 out of every 1,000 people is a millionaire. Pretty small. So those of you who are accredited deserve enormous credit, and I really mean that. Now, let's think about that. How many of those are in the US? Turns out there's 22 million. Well, that's 6% of the US. It used to be 4%, now it's 6% because the US has been performing better. But there are also some other countries that are doing better than the median is. So all of a sudden there's a likelihood, a 10x likelihood that you're going to be a millionaire in the US rather than somewhere else in the world. That's important. And it turns out that 4 countries represent 61% of all the millionaires in the US or in the world. Well, that's pretty important stuff. Now, if there's 58 million millionaires, let's add a zero. How many decamillionaires, 10 million or above, are there? Turns out there's 2.8 million. Wow. We went from 58 million and only 2.8 million of those are decamillionaires. And then if we go to centimillionaires, add another zero. Everybody who has over $100 million in net worth, there's less than 30,000. Let's add another zero. How many billionaires are there? Less than 3,000. You see, when you're trying to be on a quest for more, you become an increasingly smaller part of a fraternity or sorority at the top. And good for you for where you've gotten to today, but I'm telling you, you're going to have to be on a quest for more, and you're going to have to find others like MC to work with to get to where you're trying to go quicker. If you don't, I promise you, there will be this law of what I call reversion to the mean, which maybe we'll talk about later. I just don't want to get there right now.
My new book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, just hit #1 on Amazon. So Get Wealthy for Sure is an Amazon #1 bestseller. In this book, you'll learn the wealth building secrets that the ultra rich have used for over 170 years. You'll learn how to create your own banking system using a dividend-paying whole life insurance policy, allowing you to finance your business growth, invest in lucrative opportunities, and build generational wealth, all tax-free and protected from market volatility. You'll also learn the proven strategies used by icons like Walt Disney, the Rockefellers, and top CEOs to grow their empires and get wealthy for sure. You'll learn how to build a team of expert financial professionals, implement tax-efficient strategies, and protect your assets from creditors. You'll also learn the power of thinking like the wealthy and aligning your capital for maximum impact so you can take control of your financial destiny. I also share a step-by-step aligned capital strategy that will guide you to a life of certainty, clarity, and predictability without falling victim to misinformation or settling for the status quo. If you want to get a free copy of my book, Get Wealthy for Sure, and only pay the shipping and handling, you could go to getwealthyforsure.com. That's getwealthyforsure.com. No, this is fantastic, and that leads into the definition or the conception that people have of wealth, and of course, the opposite of that is the misperception and the misconception that they have. What's one of the most common misconceptions that people have about wealth itself?
That's a great question. Well, first of all, let me say this. Most people think that once you've gotten 7 or 8 figures, you're set for life, and it's just not the case. And we already talked about that. The more you grow your wealth, the higher the likelihood is that you'll lose it. And I know it sounds counterintuitive, but you just think about it. That reversion to the mean that I sort of touched on, but now I'll touch on a little bit more. The easiest analogy is gravity. Think about gravity. The higher you get off the ground, the more pull there is to get you back to Earth. Well, the universe has this reversion of the mean where millionaires and billionaires have more gravitational pull than I did when I was in a trailer park growing up. I had all upside potential at that point and really no downside risk, but now it's the opposite because the more successful any of us are financially, the more someone or something is going to likely pull you down. And we've got to really fight that gravitational pull. And the way to do it is to work together. And I always like to say that what's interesting is, remember that 51.6% I just quoted, MC? Well, it turns out that same 52% applies to corporate America. People don't realize that 52% of companies in the Fortune 500 list of the most successful 500 companies in America, 52% of them 20 years ago have disappeared from the list. How crazy is that? I mean, I worked for Kodak for 2 decades when they were valued at $30 billion dollars and they were the 15th largest company in America in profitability. I ended up leaving right before the turn of the century. I saw the writing on the wall because of digital photography, and now there's no wall left. That is nuts. So, kind of getting back to your question, I think the common perception is that, it's not just about how much you make, it's about how much you keep. And there are three ways that people generally lose money. Number one is poor spending habits. They buy depreciating assets to look or feel wealthy instead of actually being wealthy. Number two, they make poor investment decisions. They don't know how to vet deals. They entrust their money to Wall Street. They don't even think about Main Street like you and I do in terms of alternative investing. They lose to others that really don't understand either how to manage money or the area of expertise that they're promoting. I don't know if you're seeing this, MC, but there's like this epidemic going on of people losing money now in carbon capture and water stations and life settlements and coal and ATMs and debt validation funds and even multifamily and commercial syndications where people who weren't that knowledgeable about them raised money from others. Then they had floating rate debt. All of a sudden, cap rates are going up instead of down. It's a mess right now. And this is a good market. Imagine what it's going to be like if the market really softens. So I feel good about that in the sense that the cream will rise to the top. And we have been, managing investors' money for over 2 decades now and never lost a penny because we're much more intentional and we're always the biggest investors on our own fund. Well, I'm not saying, and this isn't about raising money. The whole point is you've got to find fewer, better people to do fewer, bigger things with and have fewer, deeper relationships with them. And that's why you and I have the relationship we have.
Being on the right side of compound interest equations too. So everybody talks about this magic of compound interest, which is fantastic. And if it's tax-free, it's even better. But and maybe if you can share a little bit about that too, because that is the biggest one where when it comes to tax planning, and you're a maestro at that, sitting in your lounge in Puerto Rico while you're talking to me, people don't understand that you're on an opposite, on the worst side you could be, on the opposite of a compounding interest equation, which is going to affect and erode your wealth very, very quickly.
Yeah, I mean, you already know my strategy, and it's not anything complicated. It's not these exotic tax schemes or anything. I have two tax strategies. One, I live in Puerto Rico, and I pay 4% corporate tax, and I pay 0% capital gains, interest income, and dividend income. That's what I pay living in Puerto Rico. Now, yes, I have an income tax on my employment, but I don't pay the federal tax, the state tax, the other taxes that you pay in the US. Second thing I have is a Roth self-directed IRA, 401k, and everybody in our family does. So think about that. If you're paying 0% in a Roth, if you're paying 0% for capital gains, interest income, and dividend income, and if you're paying 4% on corporate taxes, a flat rate, what's your blended tax rate? And everything is legal. And it's not exotic. It's out there in the public. I'm not doing conservation easements. I'm not doing bonus depreciation. I'm not doing opportunity zones, and I'm not dissing on them. It's that I think that there are going to be things that are scrutinized depending upon who the new administration is after the election. But at the end of the day, I just want to go simple. And Roths aren't going away. At least I don't imagine they are. My kids can inherit my Roth for up to 10 years. Without paying any tax on it. So imagine what they could build mine with. And I live in Puerto Rico, where one of my sons lives here and the other one still hasn't figured out how to get out of California. But he's got a beautiful place up in the mountains, or in the hills, I should say. So anyway, that's it. I don't know if that's kind of what you were looking for, but that's my tax strategy. Keep it simple. And by the way, I live on the ocean, so it doesn't really suck. So life's good here in Puerto Rico.
Life does not suck. I love it. I love it. So there might be some accredited investors, successful people millionaires, multimillionaires listening to us right now, and they're trying to get to the next level. What usually stops these people from taking that next step and getting to the next level?
Yeah, well, I'm going to tell you my opinion, which I'm never bashful about sharing because it's based on experiences. And the first experience I had, unfortunately, was with Merrill Lynch. And for those of you who've heard this before, when I left corporate America, I used to be in senior management with Kodak and Disney. I had a big IRA, and a well meaning friend referred me to his broker at Merrill Lynch, and I'll be darned if he wasn't successful at making me broker. He turned my 401k into a 201k, and if I were still there, I'd be in special K. And I realized there was one critical component that I never thought about. What is the one common theme anytime I've ever lost money with anybody else? And the answer is laziness. Anytime I'm lazy and I don't trust but verify, maybe even I've had a relationship with someone for a couple of years, and so I start getting lazy. Or I don't want to learn something, but I'm willing to write a check for it. Well, you deserve to be at risk because you haven't mitigated the risk. And there's different layers of risk that you're going to have when you invest. And one of those is knowledge risk. So if you can learn from me or you can learn from MC, you will have what's called knowledge arbitrage. You'll literally be able to de risk your investing by learning. Forget whether you invested with MC or me or not. The whole point is learn what we know and put it to use in the totality of your investing life. The second thing is, I always catch myself thinking like a thousandaire. Why? Because I grew up in a trailer park. So to have become a millionaire or a multimillionaire or a decamillionaire or even more, I have to catch myself thinking like a thousandaire and picking up pennies when dollars are just out there and there's opportunities to be able to benefit from those. And then the last thing I would say is I always tell people that comfort is the silent thief. You know, we all want to be more comfortable, which is why we want to have a higher net worth and higher income. The problem is when we get there, we allow ourselves to be comfortable, and comfort steals our dreams. Comfort is the silent thief. And don't allow that to happen. When you get to six figures in income, when you get to seven figures in net worth, when you're in your 40s and your 50s, you need to be on a constant quest for more. And those two really big pivot points in your life are going to be at 50, 50, and 60, 60, because 60, you've been programmed to think that it's time to retire. Here's a better plan. Why don't you start rewiring in your 40s and 50s such that when you get to 60, you love what you do, you're really doing well at it, and now you can make money, do good, and have fun every day with your family or anyone else you want to do it with.
One of the concepts that I really appreciated you sharing, this really was a game changer for me, and I know you talk about it inside of Access Insiders quite a bit too, is this concept of a money lens, and just comparing and looking at what most people's money lenses look like, and how you can improve that. And that was very helpful for me. Is there anything you could share around this concept with my listeners and viewers, this money lens, and what most people's money lenses look like, and how my listeners and viewers can improve their money lens?
Yeah, well, you've heard me talk about the money game. And everyone probably listening, if you followed me for 20 years or so, since I did the first State of the Union at Harvard, that was sort of my big breakthrough in terms of people following me. So if you've already heard this before, just think to yourself, repetition is the mother of skill, because I'm going to say it again. There's a triangle that I drew for my kids over 30 years ago at the kitchen table. And I said, look, if you want to win the money game, you're going to have to learn how to generate more income or cash, accumulate more wealth, which are assets that both throw off income and go up in value. And you're going to have to keep more of both. And how do you lose it? A, you pay more than your fair share in taxes. And B, you lose it through investing in the wrong thing or with the wrong people. So bottom line is most people's money lenses are really only attuned to active income. You're owning a home and you believe that that's how you're going to accumulate wealth. You have a 401k and that's how you're going to accumulate wealth. And I always joke, it's a true story. I had a little graph back before there was spreadsheets, graph paper, and I had figured out that based on two strategies, owning my own home free and clear and maxing out on my 401k every year, I would become a millionaire by 62.1 years old. I'll never forget it. Graph paper. I literally charted it. I tracked it every month just to see how I was progressing against it. And that was my strategy. Now I look at it now and I think, my God, how simple was that? But you know what? It got me thinking about what I needed to do to get to where I am today. And so passive income, recurring income is critical to support your active income. And in accumulating wealth, there are really three elements of accumulating wealth. Number one is timing. Number two is appreciation or cap rate compression. And the third is leverage. Forget everything that everybody ever tells you about cash flow being the be all and end all. That's great for lifestyle, but that's not going to get you wealthy. So those of you who make six figures a year and have seven figures in net worth, that's a great start and you deserve to be congratulated. But that's not going to get you financial freedom. You've got, unless you simply don't want to spend money. And I'm as frugal as anyone on this call. Believe me, I'm more minimalist than you might imagine. But I just realized that on average, you're only going to get average results following average people and their wealth recipe. The question that you ought to be asking yourself is, what do people with 100 million plus net worth do? So every time you're at a point where you've got let's say a 7-0 net worth, you ought to be thinking like an 8-figure net worth person does. You got to be following what the decamillionaires do. And when you're a decamillionaire, start following the centimillionaires. And when you're a centimillionaire, start thinking and following billionaires. I always think to myself, it's amazing that I've got two sons, and one of them, as I'm thinking like a thousandaire, he doesn't know how to think like anything other than a billionaire. And by the time he was in his late 20s, he'd created a $3 billion company in the private lending space. It's all about mindset and that whole money lens. And so that's really important for people to realize, is you got to have the right money lens.
If you've been watching the news headlines, you know that the world's top CEOs, biggest investors, family offices, ultra affluent, and political elite are all moving to cash. Why? They're building up their war chest to go buy assets at a significant discount in the coming months. They are warehousing their capital in vehicles that have stood the test of time for 170 years, with institutions that have made good on their promises for 170 years. If you're interested to learn how to build your own banking system using the infinite banking concept, just like all of these parties, you can watch a presentation at yourownbankingsystem.com. That's yourownbankingsystem.com. Let's talk about strategies quick a little bit. So we talked about risk management was one of the things that you shared, and especially knowledge risk. And I think that would be a great topic right now for folks listening that over the past 12 to 18 months may have lost some money already. And as you said, we have not had a storm yet. We've not seen a downside in markets yet. So in good times, this has happened. So what principles and strategies can you suggest for people to adopt to minimize risk right now in their financial life?
Well, I'll give you the big one. And it's hard. It's always hard to say because, over the course of my lifetime, I've had some big learnings, and they generally come from losses. And I remember back in 2009 and 10, we were buying up to 3 homes a day in Vegas. And our annualized return on our flips was over 60%. Our investors were thrilled, we were thrilled, and so on. And then the legislation passed something called AB 284. And it was a bill that was passed to protect homeowners, not unlike happened during the early days of the pandemic, where you couldn't evict a tenant, you couldn't foreclose on someone, same kind of thing. 68% of all homes in Vegas at that time were underwater. And all of a sudden, one day we go to the auction, and the foreclosure moratorium meant that we were sitting there with seven figures in cashier's checks from our investors, and we couldn't buy a home. Well, funnily enough, that same week, someone called me with an opportunity to buy a $2.8 million home, fully furnished, that had a 180-degree panorama view of the strip for $618,600. I had no clue what to do with a luxury home, but I thought that is such a screaming deal. We'll find a way to make it work. Who knew that in 2009, December 24th, we closed on that deal, Christmas Eve day. Who knew that Airbnb's first full year of business was that year? So we were working with Vrbo and vacationrentals.com, and Airbnb was in the background creating something. We bought another one, a $1.2 million home for $247,000, and we thought we're going to build this network of luxury vacation rentals. And then we get a cease and desist letter. We've got all 5-star reviews. The neighbors love it. No one's complaining, but turned out that the hotel got a lobbyist and petitioned for a prohibition against short-term vacation rentals in Vegas. So here we had a flip business that was going gangbusters, and it went away overnight. Then we had a vacation rental business that we were going to have a fine, which we did, of $1,000 a day in perpetuity for each property we had. Think about that. It's crazy. And we realized that the government can literally pull the rug out from under us anytime they want. Then I'm at a mastermind, and a guy named Mike from Boston said, hey, would you mind taking the proceeds from the sale of that home and lend it to me, because my lender can't perform on Tuesday? And this was a Saturday. And we're at a mastermind, and I said, Mike, I don't know anything about lending. And one thing led to another. I did the deal, and that was the first deal that I'd ever done as a private lender. Guess when it was? When I was 59 years old. How crazy is that? My first deal in what became the big breakthrough for our family was when I was 59, but my sons were in their 20s. And we learned something, and the reason I bore you all with this is because we learned something so massive. We never, ever have wins and losses. We have wins and lessons. And we know every, quote, loss, unquote, is going to be a lesson that we can reframe into a win. So we were in the flipping business, and we did 73 flips in 14 months. And by everyone else's standards, we were crushing it. We were doing a flip every 10 days. The problem was it wasn't very scalable. Now we're in the vacation rental business. And for those of you who are in it, you know it's a lot more work than you think, because you're not renting a home once for a year, you're renting it every week.
Yeah.
And then we get into private lending, where you can write a check and get a bigger one back, and you can do thousands of deals. Our first year we did 306 deals. Our next year we did 609. It was crazy. And so now we're at a place where, life is really good. So I guess the big lesson I'm giving everyone is, don't worry about win or losses. Turn losses into lessons. You always have wins and lessons, and celebrate them both, because both of them are great.
What I appreciate about your mindset and how we instantly connected is that you're a contrarian thinker too, Dave.
Mm-hmm.
So, and you're willing to share your contrarian thoughts. Is that a big success too of the money game mindset?
Yeah, it's a great point, and it really has been. Remember I did that State of the Union, the first one ever, and it was 2,000 people in the Harvard Business School auditorium. There were seats for 1,500 people and 500 in the aisles, and I got up and presented why I believed that the market was going to crash back in 2005. And I asked people, how many of you feel similarly? And I didn't get a hand up. And in 2008, I was invited back after 3 years of not being invited. And I said, I'm going all in Las Vegas. And what I realized is that the one thing that's important with contrarians is that they'll have courage to publicly say what they believe to be the case without fear of repercussions. And very, very few people are willing to do that. So if you are that convicted and you're willing to share publicly, and you're willing to live with the results, one of two things happens. It's kind of like a Venn diagram. You've got knowledge on one side, and the bottom line is if you are contrarian and you are wrong, you're an idiot. If you're contrarian and you're right, you're a genius. And that literally was our breakthrough. Um, and I just realized that you got to have courage to be a contrarian. And if you are, you're really going to do well. And how did I kind of realize that contrarianism was for the right thing for me and my family? Some of you may have heard me say this. I remember, I don't know, maybe 15, 20 years ago, I was reading this report that was published by the Social Security Administration, and they were talking about people who were born 65 years ago. Here we are 65 years later, and these were the numbers I recall. And believe me, they're probably wrong, but 38 people were dead by 65 at that point. 53 were dead broke. Well, add that, that's 91. Well, my thought was, well, here's an idea. Don't do what those 91 do. And it turned out that maybe a few percent were financially stable. There was maybe a couple people who were financially independent. And then there was 1% that were wealthy. And I said, I got to figure out how those wealthy people got there because I can't continue to be in a trailer park. Now, I was well beyond a trailer park at that point, but I was trying to add my first zero. And at that point, I realized the only way I'm going to get there is contrarian, because if I do what everybody else does, I'll get everybody else's outcome. If I'm looking for an outsized outcome, I've got to do the opposite of what they do, not exactly what they do. Most people overrate this notion of best practices. Best practices are great for getting you at the top of whatever bell curve you're in, but they aren't going to get you to the 1%. And the 1% are the contrarian thinkers. And once I realized that, it changed my life.
It's that concept that you've shared on previous shows of exponential wealth leaps and positioning yourself for that. So what is one thing that my listeners and viewers can do this year to work towards getting and adding a zero as an accredited investor?
Well, here's an idea. This is a great segue. Why don't you come to our Access Insiders meeting in November and join MC and I with a boatload of other successful people, including speakers you'd never have access to, in an environment where we're all trying to add a zero together, where we're all trying to build a community of like-minded accredited investors, but accredited investors who aren't satisfied with where they are. People who want to work together, and they realize that trying to do it on their own isn't a very good model. So anyway, so I'd say they ought to join us, bud.
So can you share a little bit more about Access Insiders and the live events and how frequently are and what people, what could they expect of Access Insiders?
Yeah, well, let me just kind of share some general stuff. And MC, feel free to join because you were at the last Access Insiders meeting in Amelia Island. So this one is going to be in November, and it's going to be in Scottsdale. It's not only beautiful Scottsdale, but it's going to be at a beautiful place that we got a screaming deal on, which we're not going to get into now. But why is Access what I'd call a must-attend event? Because we only do one live event every 8 months. And this one is a couple of months out now in November. And so we won't do one for another 8 months. So why would you want to wait for a year to put together your just add a zero plan? And this is the quarter in which we and our insiders do it. We have a process that we go through in October and November and December of each quarter or each year. So we do it in the fourth quarter and then put our plan together such that we launch it on December 1st. While most people are winding down for the holidays, our plan is really gearing up. Now, what am I going to be talking about, or what do we talk about when we're at the Access meetings? Well, I present my brand new, in this case, 2025 State of the Union for real estate investors and private lenders, the entire research update that I've been doing since 2005 at Harvard. This is literally going to be, I think, my 20th one. But we do it every 4 months for our insiders because things are moving quickly right now. And I think it's really important that all of you realize that 2025 is not going to be like the last decade in real estate, where any idiot could have made money in real estate, private lending, or either early stage technology. And so we're going to be talking about the specific niches that we're focusing on within real estate, private lending, and early stage technology, because there's a lot fewer of them than there were a decade ago, where everything you had a tailwind on. We're also going to be talking about the commercial meltdown and how to capitalize on it. Not just on real estate by owning it, but really leveraging paper and being able to control it, and therefore have less downside risk and more upside potential. We're going to share our new research on early stage technology companies that we're investing in that we recommend others consider. But everything is pass or play at Access. As you know, MC, no one has to do anything that they don't want to do. It's your life, not mine. All we're trying to do is offer up opportunities in research to understand what's coming next, to then leverage it in your businesses or co-invest along with other insiders and us, or not, and then really to try to optimize your family. So we've got roughly 100 or so highly successful, already successful, accredited, like-minded people, and it's going to be a great meeting. Now, it is in November. For those that may not be able to attend, because we've only got 6 spaces left for it, which kind of aligns with my Power of 6 philosophy, which I'll get into. But at the end of the day, I think for those that are interested, there's nothing like being together live. But for those that might have a conflict that want to live stream, we're considering opening it up, because our insiders who can't attend by live stream. So why not open it up to our guests like you, friends of MCs? So anyway, I'll give you a simple link, MC, for those that want to go there next. But I would say there are really 2 reasons to do so, to kind of round this out. If you can't attend our next meeting, you should go to this link anyway and register for our insider alerts list, which gives you access to our research, gives you exposure to our investment opportunities and that sort of thing. So that's number one. Everyone ought to do this for that reason alone. Second, if you'd like to speak to me about coming to Access, being one of those 6 people, I'd love to chat with you. And if you're a part of MC's following, then you get, first dibs at the head of the line. But there's only going to be 6 spaces. It's not some scarcity mindset thing. It's not a scarcity play even. It's the fact that the hotel is limited, because we're going to a boutique resort and they're limited in terms of the number of people they can take. This thing was full and closed. I don't know. When was it, MC? You're an insider. We shut down like 3 months ago.
Yep.
And now all of a sudden we were able to get 10 more rooms, 4 of which were given to people on the wait list, and there's 6 people that can attend from here. So there's no obligation, there's no pressure to these one-on-one calls, just you and me, one investor talking to another and deciding if this is a mutual fit or not. And if it is, MC and I are going to be there anyway, with or without you, but we'd rather be there with you.
And that link, Dave, what's the link that people can go to?
Yeah. So accessinsiders.com/MC, as in MC. So access, 2 C's, 2 S's, insiders being plural, accessinsiders.com/MC. And by the way, anyone who registers for our alerts list, I'm going to send you personally the Power of 6 white paper, which is I call it my Jerry Maguire epiphany that I kind of realized in the middle of the night. And I'm going to share it with anyone who registers on our alerts list, because it's literally the one thing that allowed me to add 2 zeros to my net worth. And when you see it, you're going to say, why didn't I think of that? So ironically, the Power of 6, we've got 6 spots, and here we are. So that's it. Go to accessinsiders.com/MC to answer your question.
Perfect. I have to say this, the information that you're going to get in this group, I mean, from my personal experience, you're not going to find it anywhere else. Hundreds of thousands of dollars that the Stech family invest in information to base their investment decisions on. So the information that's going to be shared there, you're not going to find anywhere else. The timeliness of information, because we would just be wrapping up an election at that point, which would have consequences with regards to tax codes, estate planning, and you're going to be in a room with extremely intelligent and talented people, advisors and other group at that moment when all of this is just happened. So the information is incredible. The timeliness of what's going on and the ideas, there's so many ideas that I just got from the last one. That's why I'm excited about this one, because there's a lot of people with great ideas and unique ways of approaching things. So that's going to be great. And then, of course, you're surrounding yourself with incredibly successful investors that's trying to build a bigger and better future. So I can think of a better way. Plus, Dave and I will be there too. So that's what I'll share from my experience. I look forward to hanging out and meeting our listeners and viewers that join us at Access Insiders too. Dave, this has been fantastic. I really appreciate you coming on and sharing this extremely, again, timely and powerful information. And as always, providing so much value to all of our listeners and viewers.
Well, thank you, MC. I appreciate you.
And thank you to all of my listeners and my viewers for again spending your most valuable resource, your time, once again with me. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We've got podcasts, books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing world, the Wealth Dojo. You can subscribe to the weekly newsletter by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.